Welcome to those of you that have just joined to the 9th edition of the Ethics and Trust in Finance for a Sustainable Future Prize. With this topic for the launch today, artificial intelligence in finance, ethical challenges and opportunities. Very topical, couldn't be more, and we'll be listening to a keynote from Domingo Sugranyes and later on to a panel moderated by Virgile Perret. But first, let me say some words about the prize itself. It's been my absolute pleasure to be co-president of the jury together with Paul Dembinski for this prize for some of the last sessions. And it's a labor of love because really meeting all these young people under 35s that write essays in which on this very passionate subject, which is ethics and trust in finance for a sustainable future, is very encouraging. It's very encouraging to see the different solutions, the different awareness that they bring to this topic. The mission of the prize is really to promote this greater awareness amongst young people under 35 throughout the world. And indeed, we've really seen throughout the different editions, so many different nationalities participating. It is important. The topic has been very diverse, ranging from fintech to systemic risk, to nudging, to behavioral issues, to dirty money, which was one topic of an essay back in 2015. So really very, very diverse. As a reminder, the prize today is really very well recognized globally by global leaders in finance. Christine Lagarde, when she was at the IMF, handed out the prize several editions ago, as did Mairead McGuinness, the Commissioner for Finance and Financial Stability at the European Commission, but other notables like the Secretary General of the OECD, the Governor of the Banque de France. So really, we see that the awareness to this prize and to the prize winners is really very well established amongst the leaders of the financial world. Now, just very quickly, we are several partners, strategic partners of this prize, amongst which is CFA Institute, to which I belong, Euroclear, Pictet Group, SWIFT, and SWIFT Institute. They're the strategic partners. And then we have partners, ACCA and OECD, who are partnering us as well in this journey. And this journey is an incredible one. Ethics and trust. It's a necessary tool to refocus the economy for the benefit of society, which is one of the principal points of the mission statement of CFA Institute. And before I give the floor to Paul Dembinski, my co-president of the prize, who will introduce the keynote speaker, Domingo, let me cite you some key points from our investor trust study from 2022, March 2022. What is really quite significant is that the proportion of trust in financial services has risen quite phenomenally to 86% from 65% in 2021. This is amongst institutional investors. Now, our trust study also looks at retail investors, and their trust has also risen to 60% from 46%. So there's an upward trend. And I think that's important when we look at the challenges, and I'm sure the panel and Domingo will be talking about that, some of the challenges that the industry is facing in this new world of a technological world. But in terms of generation, there's also quite a lot of differences. So under 35s are really twice as likely as over 65s to have a retail trading account and to trust digital nudges. So again, seeing the importance to the generations where the over 65s will look to a financial advisor, but the under 35s are more likely to look through their apps and online for advice. And I think that's significant too. Before, regulators would really focus on one investor. They wouldn't really dissociate the different generations. And I think this is the multicultural, multi-generational environment that finance needs to evolve in. But also for the first time, most retail investors we surveyed, about 56%, envisage that in the next 3 years, access to technology platform and tools will be more important than access to a human being. So there's a definite shift to technology. But still, human advice versus robo-led advice, that has remained stable since 2020. There is still 3/4 of those surveyed that would trust human advice more than robo advice. So again, we see some of the challenges that this new technology will face. And let me just give you 2 essays that really did mark me when I read them in the different editions. One was the first prize from the 2014-2015 edition by Ross Murdoch. And he really looked at behavioral ethics and really sought to say that young people needed the tools to understand how to do the right thing. And that, I think, was a very important key message he gave us. And the other one was from Babatunde Valentino Damajo, who was the first prize in 2016-2017, who looked at that sometimes authorities having good intentions to promote services actually lead to bad consequence. And I think, again, that's something we have to take into account. So those were 2 big lessons I learned from the essay writers. And with that, I'm going to turn over to Paul, who will introduce our keynote. Paul, over to you.
Thank you very much, Josina. As mentioned by Josina, I'm Paul Dembinski. I'm on one side, director of the Observatoire de la Finance and co-president of the jury, together with Josina Kamerling. So we are about to start this ninth adventure in trust and ethics in finance journey. And it is my pleasure to introduce our keynote speaker, who is Domingo Sugranyes Biquel. Well, there are many reasons I'm so glad to introduce Domingo. First, it is a close friend of the Observatoire for many, many decades, and he has been with the jury from the very beginning 16 years ago. So he has been through the 8 previous editions and had commented and read number of papers and expressed his judgment in a very wise way as usual. Domingo has always been attached to 2 things, I think. One is the ethical dimension in social life, and the other is the business activity. So he started his career as being Secretary General of UNIAPAC, which is a Christian entrepreneur movement based in Brussels. But already in the early 80s, he moved to Madrid and joined a local mutual agriculture insurance firm with MAPFRE. He left MAPFRE 30 years ago after having contributed greatly to the internationalization and demutualization of the firm, which is today one of the biggest insurers in the world. Domingo had a very important contribution in internationalizing and providing sane business grounds to this huge multinational company. When he retired about 15 years ago, Domingo did not keep quiet for a long time, because he was recruited to be the president of the Foundation Pro Pontifice, Centesimus Annus Pro Pontifice, based in Vatican, devoted to the better understanding of business by Christian leaders and better understanding of ethics by business people. He left this job after 10 years in 2019, and since he's on board of trustees of the Voluntary Solidarity Fund, which is one of the babies of the Centesimus Annus Foundation. Today, Domingo is once again very active. He is working with Pablo Sexto Foundation in Madrid, where he has almost completed the 2nd research project devoted to work. But the first research project, which has to do with today's gathering, was devoted to digitalization and to the ethical aspects of digitalization. The book in Spanish, but I think there is a translation that will take place at some stage. The Spanish version of the book, it has been published a few weeks ago. So Domingo, you are more than the qualities to address our audience in terms of digitalization, ethics, and finance. The floor is yours for whatever you want to say to this young, and not only young people that are gathered around our cameras and the screens.
Thanks, Paul. Thanks, Josina. Good afternoon or good morning to you all. The digital footprint, is it a servitude or a service? Well, as we all know, not one of our digital footprints ever gets lost. Every click or move gets registered and used. What for? Well, in the first place, of course, to feed advertising, the so-called personalized or behavioral advertising, which is supposed to nudge us toward our next buy. It has given rise to $1 billion industry. You probably have in mind The Age of Surveillance Capitalism, a famous book which denounces this industry as a decisive negative turning point in our socioeconomic system. I'm more down to earth. I've always had the impression that this advertising just doesn't work. Seeing again and again the same ad during days or weeks, not only is it uninteresting, but it is also irritating. So what's the use? I was happy to read an article by a professor at the IE Business School, Enrique Danz, a well-known Spanish business innovation guru, and I quote, "A model which has generated huge amounts of money for the companies that sell advertising but hasn't translated into more sales. The result is that brands waste their advertising budgets, we feel spied on, and all this just so that a few companies and intermediaries that dominate this market can make a fortune. The only solution for advertisers is to go back to basics. They need to forget surveillance and return to contextual ads, depending on the content and on time, but without storing our data. We have to get rid of hostile advertising models that only benefit the handful of parasitic companies that profit from it, and make the marketing managers who believe they are reaching new customers understand that they are wasting their money." End of quote. Well, if this is true, then the whole profit-driven operation built around data tracking may be falling down soon, or perhaps some new privacy regulations may forbid its use. Of course, behavior tracking is also done for other purposes, which can be of a higher social value. Let's say, for example, weather forecast, illness prevention, contagion tracking. In fact, there are purposes where people may have a moral duty to contribute personal data for the common good. It all depends on the purpose. And we can't forget a most worrying kind of behavior surveillance, state-controlled, political or military-oriented tracking, whether to oppose an armed invasion, as is happening in Ukraine, or trying to influence voters in an election, or spying on political opponents. Whatever the purpose of tracking, the fact is that the amount of accumulated data is growing at an exponential pace. The sheer physical volume of data centers and their energy consumption is a growing concern. The use of big data is inseparable from the kind of software which allows to map the huge amount of information held in data centers, the algorithm. These software systems have come to be called artificial intelligence, a name which holds a certain mythological inflation. One famously sagacious technology expert, Luc Julia, creator of Siri, Apple's voice-controlled personal assistant, has written a book called "There is no such thing as artificial intelligence." A Spanish science philosopher, Alfredo Marcos, writes perhaps more precisely, I quote, "An artificial intelligence system has something to do with intelligence, but what intelligence it has comes from the human being. It is not artificial, and what is artificial in it is absolutely not intelligent." End of quote. The name AI was used more than 70 years ago with the first large computers, but the software has undergone disruptive change in the last 10 years with machine learning and deep learning networks, where traditional deterministic algorithms are replaced by probabilistic or statistically based software. These new generation algorithms are fed with solutions, and the system can be trained on how to reach them. No doubt, These developments allow for huge progress, from automatic maintenance systems to medical diagnosis or credit ratings. But the question remains, when is a decision left to be taken by the machine process? Which decision? By whom? More than about privacy, the real difficult ethical questions arise when you consider not the purely technological device or software, but the system around it, which includes the people who design the software and those who command its use. And these questions must be asked also, of course, when dealing with delegated decision systems in finance, as we are doing this afternoon. Well, I'll stop here. I'm not a specialist, and you probably know more about digitization, any of you. So why have Josina and Paul asked me to address you today? Perhaps, as Paul was saying, perhaps because I was involved in the prize as a member of the jury right from the beginning, or maybe, as you said also, Paul, because I have been trying during my whole active life to understand how ethics and business decisions intermingle, how ethical principles and business constraints interact, not in ideal terms, but in the real world. And the third reason, and this is probably more directly to the point, during the last 2 years, as was said, I led an interdisciplinary seminar called precisely Digital Footprint, Servitude or Service at the Fundación Pablo VI, a Catholic think tank in Madrid, with a group of economists, sociologists, philosophers, technology specialists, and practitioners. The debates are published, as was said, as Paul said, in a book, in book form, and let me give you just a glimpse of the conclusions. Starting point, technology is never neutral. It always brings improvements to our human capabilities, of course. But besides, technology influences our moral agency with new forms of social organization and new ways of making decisions. Like every other human activity, the use of technology always raises ethical questions. What purpose? To whose profit? To whose damage? Debates about artificial intelligence sometimes tend to get lost in speculation about the so-called strong AI and the utopian views of machines replacing or enhancing human perception and potential forever. This discussion, with its flavor of science fiction, often hides the real problems of today. In industry, with the so-called intelligent factory, in the media, in finance, and in many other activities, real functions are being delegated to automatic processes. And there is where the ethical discussion should focus on. Philosophers' help is needed, as well as from anthropology, sociology, and economics, if one wishes to rediscover what is truly good for people and what serves the common good. When looking at the future of work, for example, the problem is not so much of work disappearing altogether, as some futurologists would like us to think, but the fact that people are ill-prepared to change and adapt to the new jobs, with the risk of a large percentage of population remaining stuck outside the transition. There are basic ethical questions. For example, what is the true purpose of a given business? And these still are the same as in any previous stages of past industrial revolutions. But the old codes of conduct, both public and private, are out of date. The speed of change and the width of operation compel us to develop new codes of conduct. This is true in finance too, and I'm sure that this new edition of the Global Prize will bring a collection of interesting proposals. In our Madrid seminar, we issued recommendations for 3 different areas: public sector and regulations, companies and private institutions, universities, and education in general. As regards the public sector, regulation needs to be international to improve trust about digitalization, to protect personal data, and to maintain a level playing field among competitors. The EU regulatory effort on these lines is well known. It is probably impossible to regulate software as such, the so-called black boxes. So the rules will focus on input, data quality, and on output, That's traceability and consequences. Above all, the public sector is responsible for making digital services available to all, especially to the most vulnerable. Regarding private business and institutions, we found that one of the main obstacles for an ethical approach of digitalization lies in the absence of a common language and real communication between data scientists on one side and general management and boards on the other. Every company or institution should organize a serious dialogue about any system that uses data to evaluate its impact on jobs and consumers and its hidden costs. Delegation of functions to automated systems should be formalized and duly documented. A strict policy of data quality against any kind of bias in the database should be established and formalized. Equally important is the permanent critical examination of output to reduce false results. Traceability is always necessary, but it becomes essential whenever the system of delegated decisions refers to human persons, especially with facial or vocal surveillance. An interesting point regards cultural patterns relayed by digital systems. The same exactly as for other business decisions, special attention should be paid to local habits or taste. Digitization, of course, offers enormous potential to poor populations everywhere, but true access to digital environments can be constructed only from bottom up, and this could mean very different developments from the ones we know. And third group of recommendations on education. This is the core of any ethically inspired use of digital technology, forming personal criteria and discernment capacity for individuals and groups. Freedom is to be understood not only as the absence of compulsion, but also as access to and the capacity of participating in public life. And this often means liberating oneself from unconsciously endured domination, for example, from social networks. Education at all ages must include digital alphabetization, but not only. Emphasis must be put also on those things a machine will never be able to do, like reflecting on fundamental human questions. Gnothe se auton, know thyself, as the ancients said. Permanent education is needed at all ages. Change is permanent. We all need to learn again and again how to distinguish emotional contents and how to adopt a critical attitude towards prefabricated behavior profiles. In a nutshell, there is an urgent need for a proactive discourse, not just a reactive one, about ethics within the technological context and language. It needs to be developed and expressed in terms which are performant in the digitalized environment. It may be true that we are getting more stupid and less able or of sustained attention because of our dependence on cell phones and networks. But then that's our world. It is different, as happened after Gutenberg. And this is precisely why the 9th edition of the Ethics and Trust in Finance Award is so important. I look forward reading some of the papers, which I hope will be submitted to the jury according to the rules of the game Josina just mentioned, by professionals or academics of less than 35. I'm now over 75, but I'm still eager to learn from your experience and your critical views. So good luck and thank you.
Thank you, Domingo. Too many buttons on the screen. Thank you, Domingo, for this inspiring speech. You have communicated your eagerness to learn, to understand, to discover new things, and you so precisely located the locus of ethical dilemmas in technology, but also outside of technology, by technology users and those who are setting the regulatory framework at the level of international level, but also at the level of different players, namely enterprises, and especially, I think, large enterprises that have a priority role in this field. So thank you very much again, and congratulations for what you achieved already in this digital footprint research and investigation. So let us now turn to the second part of the ceremony, which is the roundtable. Roundtable will be introduced and moderated by Virgile Perret. He will introduce the speakers, and I think the theme of the roundtable, which is artificial intelligence, finance, and ethics, flows directly into the frames that Domingo has set in his keynote speech. So, Virgile, the word is yours.
Thank you so much, Paul. It's a great pleasure for me to moderate this roundtable on artificial intelligence from an ethical perspective. As you all know, the use of artificial intelligence in the financial sector has accelerated rapidly in recent years, and the pandemic has intensified the digitization trend, including around the use of AI in finance. The increasing use of artificial intelligence in finance is expected to bring many opportunities and benefits for the industry, its customers, and the society. But at the same time, it raises important issues of ethical responsibility, legal accountability, and governance. So the subjects of ethics and trust in finance have a key role to play in assessing the implications of these new technologies and to identify the benefits and risks related to their use. So to do that, I'm pleased to welcome and introduce our guest for this roundtable. I will proceed by alphabetical order. I will start with Olivier Fliche. Olivier Fliche is the director. Hello, Olivier. Sorry. Yes, he's the director of FinTech and Innovation at the Autorité de Contrôle Prudentiel et de Résolution, the French Banking and Insurance Supervisory Authority. He's in charge of the French Innovation Hub, which is the gateway for financial innovative project holders in the banking and insurance sectors. And he coordinates with the Banque de France, the French central bank, and also the French Financial Market Supervisory Authority, the AMF. Olivier Fliche is also responsible for the subtech mission of the ACPR, which aims at building on innovative technologies to improve the tools used for supervisory purposes. Next, I will turn to introduce Olivia Gambelin. Hello, Olivia. Olivia Gambelin is an artificial intelligence ethicist who works with entrepreneurs to ensure emerging technology is designed with human values at the core. Currently, Olivia works as the Chief Executive Officer of Ethical Intelligence, where she leads a remote team of over 60 experts in the tech ethics field. Additionally, Olivia is on the founding editorial board for Springer Nature's Artificial Intelligence and Ethics Journal, and she also chairs in various committees as experts on ethics and AI. Next, Marianne Haahr. Hello, Marianne. Marianne Haahr has just taken up the role as a nature-related finance lead of a global canopy, where she will be leading out pilot testing of the Task Force on Nature-Related Financial Disclosures, TNFD framework, and lead nature-related engagement with financial service institutions. Before that, Marianne served as executive director of the Green Digital Alliance, Finance Alliance, a not-for-profit foundation co-founded by the United Nations Environment Programme with a mission to scale green finance with digital technologies. Marianne has served on several working groups and as advisor to the Ministry for Foreign Affairs of Denmark. Next is Christoph Lütge. Hello, Christoph. Christoph Lütge is full professor of business ethics at the Technical University of Munich and the director of the Institute for Ethics in Artificial Intelligence. He's a distinguished visiting professor of Tokyo University and has held further visiting positions at Harvard, Stockholm, Taipei, and Kyoto. His most recent books are An Introduction to Ethics in Robotics and AI in 21, co-authored, and also Business Ethics, an economically informed perspective at Oxford University Press in 21, with also another co-author. He's a member of the European AI Ethics Initiative's AI for People, and of the German Ethics Commission on Automated and Connected Driving. Since 2020, he's consortium leader of the Global AI Ethics Consortium. And finally, Anna McDonald. Hello, Anna. Anna McDonald spent nearly 20 years in investment and corporate banking with Barclays Capital and BNP Paribas, and is now secretary of the Church of England's Ethical Investment Advisory Group. This group provides ethical investment policy advice to the investing bodies of the Church of England, which include the Church Commissioners for England, the Central Board of Finance Church of England Funds, and the Church of England Pensions Board. So welcome to all of you. And to begin the discussion, I will start with a question to Olivier Fliche. Olivier, in your work for the French Autorité de contrôle prudentiel et de résolution, you have taken part since 2018 in a task force on AI in finance, bringing together professionals from the sector and also public authorities. To begin with, can you remind us what is meant by artificial intelligence in finance, and then how these technologies are transforming the financial sector?
Yes, thank you, Virgile, for this quite difficult question, actually. Yeah, when we started our work on artificial intelligence, of course, the first question we had was the definition. I mean, what is artificial intelligence? And I think there are many possible definitions, because artificial intelligence has been used for 70 years, I think, and has been used to describe different algorithms. So it's a polysemous notion, and it tends to cover different realities as the techniques evolve. I mean, so that's the first point. The second point is that what you want to capture with artificial intelligence may depend on your area of interest or your concern. So as supervisors, we adopted a relatively broad definition of artificial intelligence because we wanted to capture a number of types of algorithm, including what was already used by the financial sector. So we included everything starting from machine learning and going to more complex algorithm. We excluded robotic process because we thought that our criterion was that when robotic processes are quite simple to understand and to audit. And as supervisors, what was our main concern was what is more complex and what is more difficult to audit. And machine learning starts being complex enough to raise specific issues for an auditor or a supervisor. And the fact also that an algorithm can be trained and trained again add an additional level of complexity because parameters can change. So there were a specific issue for a supervisor. If you are a scientist, you may be interested in only one part of this field of artificial intelligence, and maybe you will focus on those algorithms which mimic cognitive processes. And on the contrary, if your concern is about fundamental rights, you may be tempted to extend the definition, and that's precisely what the EU Commission did in the proposal for the AI Act. The definition is even broader because actually they want to capture all type of algorithm which raise fundamental rights issue. So they included also traditional statistical technique that are used for decades in the financial sectors. Well, that was the point on the definition. The use case is, yes, it's, I mean, artificial intelligence is definitely transforming the financial sector. And I will be brief about that, but we made a survey in 2018, and we repeated the survey in 2021. And already in 2018, before starting our work on AI, we noticed that more than half of the project, 50% of the projects in the financial sector included AI. So there was a huge number of projects including AI. At the time, at least in France, we were at the stage of projects, but not in force developed algorithm in production. The difference 3 years later is that 100% of the banks we surveyed have deployed artificial intelligence solutions. So artificial intelligence solutions are already in force. In three main areas. First, they try to improve the customer experience and satisfaction with AI, because AI allow for better customization of the relationship. The second is they try to optimize all the value chain, because you can use AI for the workflow management, for document reading, for the back office and all this. And the third one, which is quite interesting for supervisors, is the risk reduction, and especially for combating money laundering, for compliance, for risk monitoring, they can use AI. So three different areas. And for a supervisor, and also from an ethical perspective, they probably raise very different issues.
Thank you, Olivier, for this broad overview and your insights, which are very interesting and show that AI in finance is developing very fast. So now we should explore more deeply how AI in finance can offer ethical opportunities for providers and consumers of financial services. And I will start this aspect of the discussion with Anna McDonald. Anna, could you tell us more about your role at the Ethical Investment Advisory Group of the Church of England, and maybe give us examples of AI applications in finance that may offer ethical opportunities, for example, to develop responsible investment?
Yeah, sure. So at the Church of England, we have about 15 billion of investments. And these are invested globally in a variety of assets, from forestry, real estate, equities, venture capital, across the asset classes. And all of our investing bodies, so that includes an endowment and a pension fund, all of our investment bodies are Christian and distinctly Anglican institutional investors. And so this means that they invest in line with Christian theology, Christian reason, and Christian tradition. And so my role in the Ethical Investment Advisory Group is to help the investing bodies do just that, and to help and to provide ethical investment advice that is grounded in Christian ethics and Christian theology, but is also practically realizable. Because we obviously do invest in the real world. We publish all of our advice on our website, and you will notice if you read all the policies, there are about 20, so you may not read them all, but you'll notice that there are probably 4 key theological or ethical principles that guide our ethical stance. And these 4 principles, actually, most of them were picked up in Domingo's keynote at the beginning. But these 4 principles you will all kind of recognize. One is enable human flourishing. And so we believe that all humans should flourish. They have an irremovable human dignity that should be respected and protected. And humans should be able to flourish individually, but also in relationship with other. So that's the first, human flourishing. The second is stand with the vulnerable. The Bible consistently teaches that God is particularly concerned for those who are hurting, for those who are marginalized, for those who are excluded from power. The third principle is care for creation. We are called to care for creation, to safeguard the beauty and creativity of the physical world that we live within. And then the fourth one is serve the common good. And this is one that I heard Domingo mention a number of times. And we live within communities. Our lives are structured by the organization and the institutions that constitute those communities. And so the good of that community is the common good. And we believe that all businesses must and should serve that common good. So these are the four ethical principles, if you like, that underpin how we look at the use and deployment of AI technologies within our investee companies. So when we're looking at investee companies, we're asking questions such as how does the AI enable human flourishing? How does it enable us to stand with the marginalized? How does it enable us to care for creation? How does it serve the common good, if you like? And so in finance, we can see that AI technologies have been massively deployed, as Olivier was saying, across a breadth of areas in risk management, in credit management, and customer services. And we can probably all think of examples where AI tech has enabled humans to flourish individually and in relationship with others. Perhaps that's via kind of speedy automated credit decisions, frictionless 24/7 customer services, and particularly banks and fintechs are now that are able to offer credit to the traditionally unbanked or those that were more on the fringes of society. And so together, there are opportunities there where they have had the impact, AI technologies have had the impact of restoring human dignity. They've had the impact of allowing the vulnerable to flourish. And in turn, we can see that has kind of contributed to the strengthening of communities and serving the common good. So there are plenty of opportunities to invest responsibly and ethically by supporting these companies and encouraging them to think proactively about how they use and deploy AI technologies with the goal of encouraging those four principles.
Thank you very much, Anna, for these very interesting insights. Now I would like to turn to Christoph Lütge. Christoph, you co-authored a very interesting article on artificial intelligence and human rights, a business ethical assessment. And we are curious to know how AI in finance relates to human rights, and whether it provides ethical opportunities in this respect.
Yes, so let me start by saying I believe the AI technology is different from other technologies we have seen before, especially when it comes to ethics, because I think you have to consider ethical aspects right from the start if you want to gain the trust of users, of your customers, and without that trust, that technology will not get used. I like to compare this to automotive technology. We have had automobiles for many decades before we began thinking of safety belts, and we cannot do the same thing with AI. So we have to be much faster here. When it comes to human rights, there are a number of challenges, but there are also a number of ethical opportunities, I believe, when it comes to AI. So among the challenges, of course, in terms of human rights, are the use of your data. This has been mentioned a couple of times already before. So it must be used responsibly and according to the relevant principles. There are dangers in terms of biases, which might be inherent to the data that you use. Also, especially just to mention one example, when it comes to the training data that you use, because you have historical training data that you use to train your machine learning algorithms, and these might be biased. And in fact, often they will be biased. And so you have to be very careful what training data you use. Finally, another example is, of course, the question of security and how do you avoid, how do you prevent infringements on your rights from the outside, ultimately leading also to questions of surveillance, which might be inherent to the technology. And there's the questions all over how technologies within AI technologies within the finance sector that are in place to find out, let's say, a few things about your credit trustworthiness, but might be used for other purposes as well. So this is also a challenge. But as I said before, we also have to think in terms of ethical opportunities, because, and I think this has been mentioned by Anna, as well as maybe others, that AI can also help us in terms of combating biases or helping in terms of diversity. An algorithm might be more objective than people might be in some circumstances, just speaking very generally, and also help us to overcome poverty. And AI technology can be of much use, for example, in terms of in topics like agriculture and others, where it can really be very helpful for human development in a very general sense. So this is a double-edged sword, as many other technologies. Thank you.
Thank you, Christoph. Now I'd like to turn to Olivia Gambelin. Olivia, you are specialized in the interaction between AI and ethics, including in the field of finance and banking. Can AI techniques be incorporated into new models, for example, to promote fairness in the financial sector?
Fairness is quite a tricky one. So yes and no. And it really depends on the situation. So there is a negative side to this idea that bringing in these systems and bringing in these new techniques in AI and implanting them into our financial systems will automatically create more fair systems. No, that's not true. You need to, before implementing any type of algorithms to help in terms of fairness, actually understand what fairness means in the context of your situation, in the context of your clients, in the context of say, if you're a bank, that bank itself. What does fairness mean in this context? If there's no clear understanding of fairness to start with, and you hand this over to your data scientists and ask them to build you an algorithm to make something fair, it's not going to work. It's going to fail marvelously because data scientists will operate on multiple different definitions of fairness. That's not a bad thing, but that is something to be highly aware of. So if you are handing something over to your data scientists asking for a model, you will have a handful of them operating on the assumption that fairness is equal outcome. The other handful will work on equal opportunity, and there'll be another handful that are operating on a completely different definition of fairness. This affects how that system, how that model is built. Whereas if you've taken the time as a company strategically across the departments to actually define what type of fairness you want to build within the system, why you are building this model, what is its purpose, and what type of fairness is it going to bring, then it can be a very useful tool, and it can be a very powerful tool, because all of a sudden you have people all working towards the same goal, and it's a very clear understanding when that model should and should not be used. When a model is used outside of its intended use case, it's often, again, results in unfair outcomes. So to answer your question in a nondescript way, it's a yes and a no scenario. Yes, there's great potential, but you have to understand what you are doing before you embark on it.
Thank you, Olivia. Thank you very much. To conclude this section on the ethical opportunities of AI in finance, now I would like to turn to Marianne Haahr. Marianne, you are looking at AI in finance from the perspective of assessing climate and nature-related risk in finance. It seems indeed that AI can bring benefits to assess nature-related risk in finance, such as, for instance, deforestation risks of a specific investment choice. Can you tell us more about it and explain to what extent these benefits can also provide ethical opportunities?
Yeah, with pleasure. Thank you so much. And thank you to the other panelists for such inspiring reflections and sharings. So I want to go back to want to pick up on what Anna said around what have we seen some of the main capabilities of fintech and AI really bring to reshape the financial markets. And that's definitely in the financial inclusion space, because what digital brings to green finance is that it enables it to make even low transaction costs for assessing the greenness of very small assets, because that's where you need the efficiencies to unlock access to green finance. So if we look at today, what's the biggest hurdle currently for decarbonization for most of the listed equities? It's definitely their scope 3. So it's their suppliers and their value chains. And a lot of them are in the SME or medium-sized company space. And that's what makes up the bulk of every economy in the world, is actually smaller businesses. Most of them do not have access to green finance because transaction cost of doing a carbon audit is just too high and people don't have the time in these small businesses, right? So what is very exciting, I think, and what we're seeing mainly emerging in China, but also coming to the EU, is that we're seeing or beginning to see some integration of green scoring as part of automated credit scoring. So in the EU, it's mainly because we have open banking infrastructure, where regulation has opened up through APIs, application program interfaces, where you can go in and ask permission to get access to current business accounts of an SME. And then you can start to see what are they actually spending their money on. And then AI is being used to classify those expenditures and then overlaying that with a carbon footprint per expenditure. So you actually get automated SME scoring, and that is starting to open up for that this part of the economy can also get preferential rates on smaller green loans, or can get advice on how can you actually start to work on decarbonization of an SME business model. In the Chinese market, the model is a bit different because it's not incentivized by regulation and open banking, which is not there yet. It's more the fact that you have very large scaled fintech and mobile payment platforms. You have very large market concentrations where you have some of the digital banks that hold very large SME digital loan books. And the same banks also have e-commerce platforms where the same SMEs are on, etc. So they have a whole a big data stack of the behaviors of an SME. And there they use AI to go in, for instance, and automatically through natural language processing, automatically read the utility bills of an SME and then convert that into a carbon intensity score or an energy intensity score. And thereby they do that on a number of carbon related behaviors and are able then to offer a green scoring. And actually, if you get, so that's if you're completely decarbonized, you can get 5 green stars on the e-commerce platform and you can get access to green lending. But if you only get 3 green stars, then you can still decarbonize and you can get access to more transition lending and more advice. So I think bringing green finance down to smaller assets and thereby also a more just transition to get everybody to be part of it is some of the most exciting that I see. And then what you mentioned just really quickly on the deforestation free finance and how can we move to that? Because now when you invest into a pension fund, you actually, most of us don't know. We're trying to live green and maybe we are deforesting the Amazon with our pension fund, right? And there, of course, these public, the open source Earth observation data, especially from the European Space Agency, but also from the US side, from NOAA. That is what's being leveraged currently by fintechs, even though the resolution is not that high. You don't need that high resolution to be able to apply AI to satellite data to actually track the canopy of a tree. So you can actually track also almost in real time with 10-meter spatial resolution on open source data sets. Where is deforestation happening, right? Now, the question is, of course, And that's where we still need a few data sets, is how do you link deforestation in the Amazon to a listed equity, right? We don't have that link, right? Because we don't have the asset geolocation of all companies and all of their supply chains. So still some of that you need, if we can get disclosure or at least some way to get access to asset geolocation data, then we can overlay it with satellite photos and we can get AI to do their job. And that's a huge ethical opportunity, that we can get see-through pension funds where we can actually choose the pension plan for us, which is deforestation free, but we still need a number of the data layers. And one thing that some corporates are trying to test, which raises a number of ethical questions, is how to use geolocation data from cell phones. Because using AI, first of all, to identify trucks going from areas where there's deforestation and then linking that to cell phone data, because a lot of the transactions are happening on e-money, and then link that to actual individuals or outgrowers. And now the question is then, if you divest away from that, what happens to these people that are just trying to make a living and maybe deforesting in the same way? How can we ensure that it's an ethical shift and we use the data ethically? I think those are questions we just haven't solved yet. I'll stop here.
Thank you, Marianne. From what you say, I'm just wondering, do you think AI in finance AI used in finance could help to fight, for example, greenwashing in the future, or what? Just very quickly, I'm just wondering if you have.
Yeah, no, definitely. I think currently, what AI is mainly being used for in finance is through algorithms that can classify words, right? So natural language processing. So basically, a lot of the AI is being used to automatically read disclosure reports about a company and automatically lay that in with any sort of finds from environmental databases, and then expert and NGO reports, and then also go and extract sentiment data, conversations about a company in social media, and use that for an ESG score. Now, the rollout of IoT is enormous at the moment, right? So what we will be able to do quite soon is to move from doing very simple algorithms that can read and classify words to actual machine learning, where you can go out and say, okay, this listed company has said they are completely deforestation free. Then you can go into use machine learning instead. So if you have the asset geolocation and go into the European Space Agency Earth observation data stack, and then you can have the machine learning actually verify, is that disclosure that the AI has read, is that true? So I think that's the future. It's not here yet, but it's definitely coming with the rollout of IoT and sensors in general.
Thank you very much, Marianne, for this insight. I think now we should turn to another section of the discussion, which is related to the ethical risk and challenges emerging from the use of AI in finance. AI applications in finance may indeed create or intensify financial and non-financial risks and give rise to potential consumer and investor protection issues. So my question to Olivier Fliche. Olivier, one of the main challenges with AI in finance is related to the so-called problem of explainability, that is understanding why and how the model generates results. Why is the problem of explainability so acute with AI in comparison, for example, to other complex mathematical models in finance? And then, do users have a right to explanation for decisions made by algorithm?
Yes, I think, yeah, I agree very much that explainability is one of the key issues about AI. That's what identified, I would say, as the #1 issue for supervisors. One of the reasons is maybe an egoistic reason, is that we supervisors don't like black boxes. We don't like what cannot be explained. So that was the basis of our reasoning. But when we started discussing with banks and insurance companies on how they They could ensure explainability when we discussed with academics, when we discussed also in roundtables like this one. We discovered that actually that explainability is can be understood in very different ways. And the second point is that you can't envisage explaining an algorithm in the same way to everybody. And you can't explain the results of an AI algorithm to the customer as you would explain it to a data scientist. And so what was very important for us is try to first make a list of people who have a right to explanation, and then try to make the link between this audience and the type of the type of explication that they should have. So who should have the right to explanation in the finance sector? First, the customer, if the customer is provided with a recommendation. That's not always the case. I mean, there are many AI algorithms which are not in contact with the customer. But if an AI tool is used to sell or to recommend an investment to the customer, this customer should have the right to understand why. Because at the end of the day, that customer must be sufficiently aware of the risk and opportunity of the product to take the adequate decision. So that's, I think, a regulatory requirement, but I think it's also an ethical requirement in general. So the customer has a right to explanation. At the other end of the spectrum, the auditor or the supervisor has also a right of explanation, but that's not the same, because the supervisor or the auditor we will want to look into the black box. They will want to understand how the code is working, which is not the case of the customer. So you already see that you've got two types of explanation, which are going to be very different. I would like also to mention that in general, in the financial sector, AI algorithm will be integrated in the whole process. So employees of the banks will interact with algorithm. And they have to have a certain level of understanding of the decision or the recommendation made by the algorithm, because if they don't have this level of explanation, they won't be able to challenge the results of the algorithm. So that's a very important point for us, because in regulation, in ethical debate, we always say, well, if there is a human in the loop, we will be safe. That's not so true. I mean, if the human in the loop is just watching the algorithm and has not the tool or not the understanding to challenge the algorithm, the human in the loop will be useless. Actually, will not be the safeguard that we think it will be. So that's also an important point. And the fourth type of people who have a right to explanation is the board of directors. Because what is very important for us is that algorithms are inserted in the governance of the firms. And so for, I would say, sensitive algorithm, maybe not all of them, but for sensitive algorithm, it's very important that the board of directors is able to assume the risk, to give the direction, to also to say what is fair or what is not fair. I mean, I think Olivia made the point. I mean, and in the opening speech, the point was made too, is an algorithm cannot, cannot define themselves what fairness is. I mean, the board of directors should have this this say on what is fair, what is unfair, what is ethics, and what is in line with the values of the firm. So you see that there are many people who have the right to explanation. Maybe they have the duty to understand, and for each of this type of population, we have to find the right way to explain things. And that's precisely the difficult point with AI, and I mean, more general speaking, with algorithm or with sophisticated methods, is how can you explain in sometimes a very simple way something so that people can understand it without entering into the technical details. And of course, we discuss with academics to understand this and to have insights on this issue, because it's a very important issue for regulators. But we also think it's, I mean, we will learn by doing. So we organize also workshops, or even competitions with the financial sector. We ask them, we submit them problems to solve, like we organize, for example, a hackathon to explain credit scoring algorithm, so that we can see that how in practice data scientists and the finance sector can address this issue, because we will really have to learn this. This is completely new for us, and that's one of the main stake for us in future years.
Thank you, Olivier. Thank you, Olivier. We can see it's a very complex issue, but your explanations are very helpful. So, and I think in relation with the issue of explanation, I will turn to Olivia Gambelin. Olivia, given the complexity of AI technology, there's a risk that the systems goes out of control or underperforms or makes decisions that are wrong with negative outcomes. There is also a large number of potential actors involved in the deployment of AI, in particular when it is outsourced to third parties. If the system is so complex to understand, if there are multiple actors involved, how can responsibility be assigned when things go wrong?
That's a great question. And I think I have what is usually an unpopular response to this. So it's a two-part answer there. Again, the first part is you have a sense of shared responsibility. This comes at the level of actually creating a company culture where people do not say, I've created this, or I've worked on this project, but I'm just a cog in the bigger machine. I therefore have no responsibility over the outcome. Instead, it's important to cultivate a company culture in which everyone feels at some point in some way responsible for their contribution. Again, not fully responsible for the whole system. That's daunting, especially when you have programmers and data scientists that really don't have the ability to see beyond their day-to-day work. Assigning them full responsibility is quite burdensome and will actually slow down their work. But instead, you want to go about of creating that company culture of a sense of responsibility where I want to do right by this. If I'm seeing something that is questionable or seeing something that may be wrong, it is good for me to raise that concern with, say, my project manager or my head of department. That is something that is my responsibility to make known. That is where my responsibility comes. And in general, and the reason with the company culture making that important is company cultures will often go counter to that, where you don't want to raise a concern because you're afraid it will delay the deployment of a system, and that's why you don't raise that concern. Instead, if you have the company culture that says, no, it's good to raise that concern, then you have that sense of shared responsibility. With that, though, and here's the second part, you do need a point of accountability, an assigned point of accountability. This can be more than one position. It can be a combination of 2 or 3 people, but you do need someone in charge of driving ethical initiatives, driving the governance of the AI systems. If you don't have someone specifically assigned in terms of accountability, nothing's going to happen. It's great to go to a team and say, we want to be responsible and we want to be accountable for our technology. But if you don't have someone that is ensuring that is happening, putting in the right processes, putting in the right governance, then it will get lost in the wider system. So when it comes to having this sense of responsibility and these accountability mechanisms, it's that two-part system that needs to go into place: the general shared sense of responsibility through company culture, and then that point of accountability through assigning, again, could be your project managers, could be a manager, could be head of department, but someone needs to be the point of reference where questions can be directed to.
Okay, so the culture of the firm and accountability mechanisms are key. Thank you, Olivia. Now, I'd like to turn to Christoph Lütge. Christoph, AI techniques are using massive amounts of data sources, referred to as big data. However, the inadequate use of big data could present risks of consumer protection, such as risk of biased, unfair, or discriminatory consumer results. What are the main issues of AI applications in finance for users, and to what extent do these issues potentially conflict with human rights?
Yes, thank you very much. This is quite similar to the former issues we discussed about what are the issues. Actually, I think what the issues are in terms of ethics when it comes to both to AI as well as big data are quite clear. So you've mentioned them: biases, unfair discrimination. There is the explanation part, which was mentioned by Olivier before. There is the data protection, data security issues, and there are a couple of others. But I mean, what is interesting now is what can we do about it, and what can companies do about it? And I think that's why I would like to follow up on what Olivia just said, because I think that this is the main issue now: how to assign responsibility and accountability, and to whom. Because there is still quite some misconceptions about this. For example, when it comes to a field that I'm very familiar with is autonomous driving, and so far with autonomous driving and with driving in general, so far it is the driver who is ultimately responsible for everything that happens with the car, or maybe the owner of the car ultimately. But anyway, it's the individuals, but when we'll see more highly automated functions and eventually autonomous cars of the higher levels implemented and deployed on the streets, then responsibility will have to shift towards companies, at least in those cases where the car was going on its own. And that we will see we will have to see with many technologies, AI technologies in particular. We will have to see this shift. Also, we will not be able to hold the individual programmer responsible. I mean, we might be, but that's not the main point. The main point is how can the companies or other organizations be held accountable towards the products they are making, and that is a key issue that all those companies that I'm aware of and who are working in this area want to solve. I think it's some of the points that have been made are quite valid. How do you structure that in terms of your organization? Where do you put the main organizational workload? Do we need additional positions, such as a talk of a chief AI ethics officer? Maybe that's helpful. I'm not sure it is, but it might be also several people who are driving it. But it's clear that this has to be a key issue for companies and other organizations in this field. You will not be able to avoid it, and you will not be able to just say, well, we have this philosophy, we have these ethics guidelines, and we put it on the wall and forget about it. So yeah, I think this is a key issue: how to implement that in your organization.
Thank you, Christoph, for your insights. Now I'd like to turn to Anna McDonald. Based on your experience, Anna, with the Ethical Investment Advisory Group of the Church of England, could you give us a few examples of how AI in finance may have a negative impact on users and even perhaps more broadly on society?
Yeah. So I mean, I think as I said earlier, we've seen lots of opportunities where AI can be used in ways that enhances human flourishing and serves the common good. But we've also seen lots of ways in which AI introduces significant risks. And these can be ways that disrespect or threaten human dignity that we spoke of earlier, that exacerbate human vulnerabilities, marginalize, that discriminate people, or they can be impacts that damage the environment through the extraction of physical metals such as lithium or cobalt that this computational tech relies upon, or the high energy consumption of data servers or e-waste created by the planned obsolescence. So there's lots of different ways in which that can create significant risks and can threaten the kind of cohesion and trust and integrity of society and those institutions that serve society. And I guess I'm particularly thinking about the AI behind big tech social media platforms and things like that. But what we at the EIAG are particularly focused on is how AI technologies are deployed in making decisions that quantify people or aspects of people into categories or classifications or boxes, and then use those generalizations to make decisions about how people live their lives. So that's a key area of focus for us. And so, and the way, and it's interesting to hear that the different experts on the panel talk about kind of definitions of AI, but the way we're kind of understanding AI technologies is that it's a massive process of simplification and reductionism. So you take massive amounts of data, and through a process of logical quantifying and simplifying, you reduce massive data into a set of classifications, or kind of, I've heard the kind of one-liner of your AI reduces or flattens complexity into clean signal, but essentially it's a kind of process of reductionism. And so if you're using AI in that way to reduce massive amounts of data so that it has the outcome of, say, simplifying cash flow projections, or spotting trends in market volatility, or identifying patterns that enable you to do some quant trading at the right time, then any risks in that process, or any errors in the data sets, or any errors that the algorithmic systems are making, that introduces one set of risks. And they might be costly and financially costly. But if you're using AI in finance to quantify or to reduce people or aspects of people into categories, then this introduces a whole different set of risks. And this needs to be done with extreme sensitivity. As we know, any sort of reductionism to people is complex and is fraught with problems. So the design of algorithms in finance say that if you have algorithms that make decisions about who to extend credit to, how long for, at what price, on what terms, these algorithms can have very human impacts. And these impacts, if they're wrong, then they can be dehumanizing. They can be very dehumanizing, they can be marginalizing, they can be discriminatory. And obviously all of these things are not fruitful for human flourishing. They're against one of our kind of ground ethical principles. So when we're talking to companies, we're really keen that the data sets need to be really, to avoid these risks, they need to be methodological with fair representations. You need to envisage the bias, but significantly attention needs to be paid to the context. And also, as we've mentioned earlier, then there needs to be a transparency and explainability in the interactions that you're having with your clients. And I think one example actually that we've just seen recently is in the Netherlands, and the tragic scandal really of the algorithms deployed by the Dutch Child Benefits Office, which ruined thousands of lives, mainly after an algorithm was doing exactly what it was designed to do. It was designed or trained to spot benefit fraud. So it reduced and reduced kind of subjectivity, the human subjectivity of frontline workers. And so it did what it was trained to do. It reduced or classified people into categories or classifications, and then it made a decision about those people, about whether they were telling the truth about their childcare benefit needs, based on those classifications. And so this system, it was recently found, had the impact of perpetuating historic unfairness and historic biases against families of low income, families with dual nationalities, for example. So that is a very clear example of where a similar algorithm deployed in finance, where if you can have very real, very human impacts and risks on people. And if you don't have transparency or explainability, if the response is the computer said it, it must be right, or it's a black box, we simply don't understand why the decision was made, humans are left with very little agency. And not only is that diminishing of trust in society, it is extremely dehumanizing and impactful on human dignity. So as at the church, as responsible investors, I'd like to kind of, it's great to hear Olivia say about the ownership of AI ethics, and I think Olivier mentioned it as well, but we absolutely want to see the ownership of AI ethics at board level, and a commitment to drive that, embed that through the organization, and a commitment to transparency and explainability and agency. But we also understand that this isn't a simple process. There's no simple decision tree that we can speak to investee companies and say, have you done this tick box? It's not a tick box or process, but the leaders in organizations absolutely need to take responsibility, and absolutely, as Olivia said, it's the leadership in the organizations that need to take the responsibility and not leave it to the data scientists. So we expect to see AI ethics at the highest level.
Thank you very much, Anna. I think with all of your insights, we can see now the ethical ambivalence or ambiguity of AI in finance. We can see that very well, and that's very interesting. But before we move to regulation and policy responses, I'd like to ask one last question to Marianne about the challenges and risk of AI. Marianne, you have served on the informal technical working group to the task force on nature-related financial disclosures, the TNFD. It's an international initiative aiming to provide a framework for organizations to address environmental risks and opportunities. The framework is expected to be released soon in 2023. So one opportunity there is the use of AI to automatically assess and capture carbon in landscape and enable trading of carbon credit with automated processes, as you mentioned. But what are some of the ethical challenges related to the deployment of AI for this case in finance?
Yeah, you are completely right that after the task force on carbon markets chaired by Mike Carney, it's really been trying to get better governance, because carbon markets are basically markets with very fragile to almost no governance, right? And that was fine when they were very small, but now very big, a lot of the very big companies and also financial service institutions have set net zero commitments, right? So they need to offset as part of their transition pathway. So they're scaling, and they're scaling really rapidly. So definitely, as you said, and also banks are reopening their carbon trading departments, which they opened and closed again because carbon prices were too low, but they're opening them up now again. And here AI is definitely enabling automated capturing of the carbon content, so basically the organic matter in landscapes and also in seascapes. So for being able to, this is an early market, but being able to also capture blue carbon and trying to ensure also some of the carbon credits and sell carbon futures. So AI is really good at that, and it also enables emerging markets to become part of voluntary carbon markets, because before, when it was only, or it is mainly, a handheld certification process, that process really pushes up the costs of participating in carbon markets. So you will not have a small-scale farmer or anyone in Africa going in, but if you have an automated approach, then first of all, you can ensure against that the same carbon credit, if it's put into one of the registries, is sold twice. And also you can have the transaction cost lower, so we can open the door for more to actually participate in carbon markets. Now, there are lots of ethical questions. One is that currently the carbon market play is only a market efficiency game. So all the governance is going to get the market to work as efficiently as possible. And all the corporates are, of course, you compete on price, right? Currently, you compete on price on the carbon credit, so you want to buy cheap and sell expensive. Now, the challenge is, of course, that if you just use AI to verify, yes, there is this carbon in this forest or in the soil, that I can make a deal with the farmer that he will take care of it for the next number of years, and then we will sell it off to a big company. Now, is that a fair price? Who takes the risk if something goes wrong with that? Is that land properly secured? So the whole sort of structuring of the contracts underneath needs to be part of the assessment, because currently there's a really rush to emerging markets and just vacuuming up really cheap carbon credits, but with those income streams not necessarily creating a more equal world or getting farmers really the opportunity to be part of a positive transition that will also enable them to crawl out of poverty. So we need more than the AI verified credit. We need also to understand the underlying structuring of the actual contract, so that there will be a fair transition of value in exchange for that carbon credit. And that still needs to happen. And what that structure is for that to happen, it is not something we have seen currently emerging at the market level.
Thank you very much, Marianne. It concludes very well this discussion about the risks and challenges of AI in finance. And now I would like to move to the last part of the discussions about regulation and policy responses. Given the potential impact of AI in finance, as well as the new risk that you explained, AI has been a growing policy priority for the past few years. So we should briefly discuss if or what kind of regulation may be required. So my first question to you, Olivia Gambelin. Olivia, the role of supervisory and regulatory agencies may be important to mitigate the risk emerging from the deployment of AI in finance and to protect consumers. But there is also the risk of killing innovation. So what is the priority at this stage? Is it regulation or innovation? Can we have both?
So of course, I'm going to answer both here. Of course, we can have innovation and regulation both. The great thing about regulation is it gives guidelines to our innovation and can actually spur further creativity and innovation that otherwise would not exist. If you don't have guidelines, if you don't have challenges to design for, then you are only simply going to turn around a very basic innovation, if you want to say. But if you have those higher challenges and those guidelines set by regulation, that's something that spurs creativity. The important factor here, though, and this is pertaining particularly to the up and coming AI regulations coming out of the EU, and this is my opinion. I do have some concern about the effects that it will have on smaller business because of the amount of auditing and documentation that's required of high-risk cases, which is important. I'm not saying that that's not important. That does create significant barriers for smaller businesses to enter into a competitive space in those high-risk instances, whereas larger companies, larger firms that to be quite frank, don't tend to follow regulation, have the resources to be able to still operate competitively for those high-risk technologies. So my concern lies more not with that the regulation is going to stifle innovation, but rather that the support systems aren't there to support small business in operating competitively in a way that is both responsible, fair, and trustworthy. So that's where I see actually innovation being stifled, not by the regulation, but by the lack of support in this new industry.
Thank you, Olivia. I also would like to hear Christoph on this point, because there is currently no unified regulatory framework at the international level. But as Olivia mentioned, the European Commission adopted a proposal for regulation on AI, which would impose significant obligations impacting businesses. That regulation dates back was adopted on the proposal was adopted in 21 April 21. What do you think about this proposal? Will it achieve its objectives?
That's a very good question. And I have to say, as Olivia, I have some concerns about it. I think that regulation can be helpful towards innovation, but it doesn't have to be. There are some sectors where we definitely need more regulation, and everyone knows about this. For example, autonomous driving again. We will need to have regulatory standards all over Europe. But I mean, the finance sector is already heavily regulated. That we can certainly say. There are some variations across Europe, yes, but in more or less, this is quite a heavily regulated sector when in comparison to others. Still, now, I mean, the EU AI Act. In general, by identifying different levels of risk for AI systems. That certainly makes a lot of sense in general, taking this approach, and then also saying, well, some of the AI systems have comparatively low risks, and we don't need to do anything about this. But for other areas, and it will depend on actually on the details of what will be said about for which systems will apply what. I have this concern as well that I think we might stifle innovation, at least in some of the business of the types or layers of companies. Certainly, the really big companies will be able to comply with that, such as they could with the GDPR. But for other companies, it will be much more difficult. And I think it will, and we will see these discussions in the next month, and they have to be taken very seriously. And I think we also have to include our input in those discussions too, because whatever will be in that final regulation will have quite an impact. And so I really encourage everyone to have a close look at it and what's going on in the meantime and in the next month, and to see that we will succeed in making this regulation as promoting innovation and not stifling it.
Thank you, Christoph. Does anyone want to add something to what Olivia and Christoph have said? Feel free to raise your hand, or if you like to add anything. No, okay. So well, then we are reaching the end of this discussion, because I don't think there were I don't see questions in the Q&A. So thank you very much, all of you, for your contribution to this discussion. It was really a very exciting and fascinating topic, and your insights bring some great light on the subject. I can see Paul is back with us.
So thank you very much for this very interesting roundtable. You have touched a number of ethical issues, and you have shown, your different contributions have shown that the context for sure is changing. There are new questions, but there are also the opportunity to revisit many of the old questions: responsibility, accountability, the ethical dilemmas, the notion of fairness, technology and surveillance, etc., etc., etc. So there is an old definition about finance saying that finance is about trust. I was wondering, the word I think was not used during these roundtables. I was wondering if you see AI as being a trust-building device or possibly a trust-destroying device, probably both ways, but it would require probably another meeting to go deeper into this. So thank you very much for providing this framework for ethical questions where technology, finance, and ethics meet, and they have a lot of the complementarities, and there are many issues that need to be solved, not only by regulation, as the last part of the talk was suggesting, but also by practical decisions at all layers of, let's say, business life and for life of finance, starting from rank employees and ending with the board of directors and those and the supervisors and so on. And I think this is a very important point, that the responsibility is not only located somewhere at the very top, but is at the very inch of our daily work and daily activities. So thank you very much. Thank you very much to Virgile. I did not introduce you fully at the very beginning. You are the project manager of the prize at the Observatoire, and you have a PhD in sociology of money. So you're not now touching more and more about technology. So Virgile is our technology man in the Observatoire. So thank you very much to all for contributing to the launch of this 9th edition of the prize Ethics and Trust in Finance for Sustainable Future. And sustainable future has many meanings, as we have seen. There is also a social dimension to it, and the fairness dimension to it, which has been strongly stressed by some of your interventions. But what I think the most important message of this afternoon is to say that the prize now is launched, that the young people under 35 who are interested in testing their abilities in addressing ethical questions in finance have until the 29th of May 2003 to get in touch with the Secretariat of the prize and to hand in their paper. The last date, as I said, is the 29th of May of 2023. In the meantime, you will hear from us, because we have planned to have regular events of the type of roundtables in order to discuss ethical issues in finance, not only in technology-related field, but also in organizational perspective and also in educational perspective. So you will hear from